Hey folks, good afternoon, good evening. It's a Saturday, and we at this point of time we look at what Nifty has done over the last few days, and try and analyze what's in store for us over the coming week. So before we move, before we move into the Nifty performance, just wanted to thank all of you who have registered for our options trading program. We are starting tomorrow. A couple of slots are still vacant in case you have any, as if someone wants to, uh, uh, go for it at the last moment. Uh, just the two slots are still vacant, just to let you know. And we are starting 10:30 a.m. tomorrow morning. So yeah, so coming back to what we want to discuss today. First of all, let's start with how Nifty did over the last week. And we know that we had the RBI policy on Thursday. And on Wednesday, Nifty actually gave a breakout above the trading range that it was trading in. So from 18,450 odd to 18,650, and it closed above 18,700. So, which you know, made us believe that we might be seeing new highs earlier than expected. But unfortunately, the RBI policy, rather, what the governor said, post the policy, sorry, uh, did not enthuse the market much. Um, his continued focus, as he wants to keep saying, Arjuna's eye on the inflation targets. So this is what the market is probably not liking a lot, and it's not getting a very clear direction as to when the governor will start, or the RBI will start, reducing rates. But going by the fact that this is an election year, we have Lok Sabha elections within a year, and obviously, from a political angle, no political party wants inflation to go out of hand, as that would be a disaster, a political disaster, that is. So I guess the RBI governor doesn't have a lot of leeway, at this point of time, to start reducing rates, until and unless, of course, inflation gets very much under control. So Nifty on Thursday and Friday gave up all its gains and finally ended just 0.2%, with just 0.2% returns for the week. IT was the main underperformer. That was IT index was being dragged down by some comments from in a known, what's the name of the company? Inam. It's a global IT services company, software engineering and product development company, that is. And they hinted at uh, some uncertain days going ahead in terms of projects getting signed and stuff like that. So the entire IT sector, even small caps, mid caps, came down. So IT ended the week with 3.5% negative returns. The other notable negative returns came from the FMCG and the PSU bank sectors. Not by much though, just by 1% down each. While outperformance was seen among sectors like auto and realty. The small cap index also continued its outperformance. So among the broader markets, so we saw good outperformance in pockets like defense, where stocks like HAL, Mazagon, Cochin Shipyard all gave excellent returns. Bearings, where SKF, I think, gave pretty good returns for the week. Power generation companies, railways, in some chemical companies, the metal pipe manufacturers, cement, real estate, all these, in all these sectors, we saw quite a few companies giving very good returns for the week. So that's about what the markets did over the past week. Now moving on, what does the futures OI reading tell us? See, so we saw some decent OI build up on those 2 days where the markets are making a, where markets were topping out. So 8,000 to 8,040. Sorry, 18,800 to 18,840 is the zone where these open interests got added. So my obvious reading is that these are short positions which got built up during the week. If I go into the options chain, what do I see? 18,700, sorry, the 18,800 is the futures level. And what should I say? The spot level is about 60 to 80 points below the futures level. So the spot is much closer to 18,700 and not 18,800. So if you look at the Nifty options chain, what we see here is that the 18,700 level is where the maximum call open interest is placed. So this level is going to act as a very strong resistance going forward. And also 18,600 is a place where a similar amount of open interest got added. What do we see on the put side? Strangely, 18,700 is the place where the maximum put open interest is also residing right now, while the maximum OI got added at 18,300 levels. But since I've been looking at these on a day-to-day basis, I know that these 18,700, the put positions at 18,700 have been building up since Wednesday. So, and so people who are short straddles, who do short straddles, they have been writing both the 18,700 call and put since Wednesday. And on Wednesday, the premium on these 18,700 straddle was in the range of 220 to 250 odd points. So these people, these straddlers, the short straddlers, have a span of 250 points on either side, which basically means, which basically means they are expecting the Nifty to stay in the 18,450 to 18,950 range. So, so until and unless Nifty breaks below 18,450, this open interest will not get reduced by much, is what I believe. We'll have to see what happens later, but this is what my reading of the open interest chart is. So because why I'm saying this, because I see very negligible amount of unwinding at the 18,700 strike as of now, and I saw the 18,700 build up happening over Wednesday and Thursday. So I mean, saw in the data, of course. So what might happen? So if Nifty breaks below 18,450, so then these straddlers who had written puts as well, they would have to unwind. I mean, because their span would have been violated by that time. And in that case, we might, because of this unwinding of puts in the 18,700, 18,600, these levels, then we might see a bigger correction going forward. So, but as of now, it seems like we are back. The breakout which happened on Wednesday, that was a failed breakout. and we would have to assume that we are back in the 18,450 to 18,650 range for now, that is. So let's look at the charts and see what they have in store for us. Oops. We'll start with the Nifty. Yeah. So these were this is the range like that we have been witnessing over the last 2 weeks. And this is what happened on Wednesday. And then this is where the daily resistance was, the pivot resistance was. This I had alluded to in my Telegram channel, where I have been writing uh, uh, about market views after the end of every day. So I alluded to this thing on Wednesday, I guess, where it might face resistance. I had mentioned about this, and I mean, Nifty did find resistance there, and then aided by also the RBI policy, which was not really gung ho kind of a thing, it fell, and it's back into the trading range. So as of now, we would have to say that Nifty is in consolidation again, back in the consolidation. So nothing much there. If I go into the weekly chart, do I see anything? No, nothing really. So yeah, there's a bad. This is something not so good. Like it's kind of a dragonfly doji on the weekly chart, so which is not a good sign. But just going by, I mean, looking at it from a single week perspective is not also right. We would have to see whether there is any follow up in the downward direction or not. Then only we can say that there is we can say whether there's any sign of trend reversal or not. So moving on to the Nifty IT, this did not do well at all. So as we said earlier, it gave negative returns of 3.3%, and what happened worse is that it again came back below the CPR zone in the daily charts. It might find support here, which is at 28,000 levels. But if it breaks, then again, we might see lower, levels in the Nifty IT, and which is not good. If Nifty has to move on and make higher highs, all three that I've been saying this over the last few weeks, that all three, Nifty IT, Bank, and Reliance will have to, perform well. And Nifty IT being that much of an underperformer doesn't really help in this case. So it would be good if Nifty IT can climb back above 29,100 levels. That in that way, it would negate this kind of correction significantly. But if it does not, and if it falls below 28,000 levels, then we are headed in for a sharper correction, both in the Nifty IT as well as in the Nifty. Nifty Bank, it's in a range. It did break out above the previous highs, which was at around 44,100 levels. But after that, it has been in a range. It's facing resistance continuously at 44,500 levels, and support is coming in so far at 43,700. But this is a more a critical support, I would say, for the Nifty Bank. Which is around 43,500 levels. That's a make or break level for Nifty Bank. If Nifty Bank goes below that, definitely it's we are looking at significant corrections in the Nifty as well. And the critical level for it to break on the upside is 44,500 levels. It's this. Let me draw this position as well. Yeah. So these are the two levels we should watch out very carefully for Nifty Bank. Next comes, no, not this one. I don't want to go into this one right away. I wanted to show Reliance anyway. Let's see Reliance, what is there. So this is the daily chart of Reliance. Let's, if I move into the weekly chart. Yeah, as you can see, if I zoom it a bit here. Yeah, so this is the area where Reliance is finding difficult to, break out from, which is 25,050 level, 2,550 levels. So every time it's going there, it's finding some resistance and, getting pushed back. So, but as long as this level holds, 2,400 holds, my belief is Reliance will find some trigger, something, and maybe sooner rather than later it will, break this level, provided other, overall market sentiment again improves, and so Reliance also, might get into the bandwagon, and finally we'll be able to cross that level. So today I also look at these two charts, which are the small cap and the mid cap chart. But first, let's look at the mid cap chart. So the Nifty mid cap 100. This is the daily chart, and you can see it's again broken below a critical resistance. This is the daily chart, and on the weekly chart, it's a doji at a critical resistance on the weekly pivots. So this is a sign of being cautious. But as long as this 33,000 level holds, I will still remain bullish on the mid cap stocks. It might just be a slight correction and come back to this level, and then again it might start moving up. Or if something were to some good trigger comes out of the FOMC policy next week, we'll come to that just in a bit. So as I was saying, this is kind of a sign of caution on the weekly charts. Similar is the case with, the small cap index as well. As you can see, this also failed at a daily pivot and has come down a bit. And on the weekly chart, yeah, that's a dragonfly doji kind of a thing. And this is the so Nifty small, the small cap chart, that is. So the small cap 250 index, that is what we are talking about. It has made a dragonfly doji kind of a thing. And this is where there's a big supply zone for it. So while Nifty mid cap has already, made new highs, the small cap index has still not made new highs. The last time it was in January 2022 when it made a high of 10,500 levels. So after that, it has not been able to, reach that level. So we'll have to see if whether the Nifty small cap index also, goes along with the overall markets and, start some kind of a correction. So there's a big trigger, actually. This is what I was alluding to a little while ago. So we have the Fed policy meeting on Wednesday. And that might, that might prove to be, a market breaker. I'm not sure whether it can make the markets, because the thing is, what are the kinds of outcome that it can have? Like most of the, based on the data, I think the market, the US market especially, is be getting positioned like it would be a no hike policy. It would be a pause in the Fed policy. But what I guess it wants more from the Fed is a sign that the rates will not rise much from here, or it's an end to the rate hike cycle. So this is where I have my doubts. I'm not very sure whether the Fed, uh, the Fed governor, Mr. Jerome Powell, would be in a position to say uh, clearly, or even at or even hint at, saying that the rate cycle is over. I mean, the rate hike cycle is over, and there will be no more rate hikes. Because I would think that he would continue to say that he will look at data, and based on data, he'll, make his decision regarding policy, even if this time it's a pause, it's a no hike policy, even if it's a no hike policy. So let's see what he comes up with, and how the market, more importantly, how the market behaves to what he says. And after that, I think we might get a trending move, either this way or that. I mean, so we have to be cautious, I guess, till the Fed policy meeting gets done, and be ready for a correction if the Fed policy comes out hawkish. I mean, it's interpreted as hawkish by the markets. So till that time, I would say a couple of, 3 more days of trading in the Indian markets. We might consolidate for a few during these 3 days, and take a more of a trending direction post the Fed policy meeting, is what I feel. So I guess that's all for now. So this is who we are. We are a SEBI registered equity advisory and training firm. So like I said before, we are starting our first batch of options training tomorrow. Excited about that. And this is the disclaimers that we need to go through. Investments in securities market are subject to market risks. Read all the related documents carefully before investing. Securities quoted are for illustration only and not recommendatory. Registration granted by SEBI in no way guarantees performance of the intermediary or provide any assurance of return to investors. And past performance is not an indicator or guarantee of future returns. So that's all from me, folks, for now. And yeah, talk to you again soon. Have a good day. Have a stay healthy and stay well. Bye. Thanks.